One mistake I used to make earlier was looking for entries before knowing where the market is heading to. Now, before I do anything else, I determine my daily bias. And in this video, I am going to share with you 3 frameworks I use to establish my daily bias. This framework has helped me filter a lot of losing trades. If you are wondering who am I am Anointing and I am on a journey to becoming a better trader. Stay with me and watch me grow. This is the first video in my trading framework series. If you enjoyed this video, the playlist link will be in the description below. If you haven't subscribed to my channel, please do me a favor and support this journey. How do I get my daily bias? This is how I get my daily bias. Number 1, market structure. Market structure is simply break of structure and change of character. And a break of structure is when price is moving up, it retraces. Once it take out this high, is known as a break of structure. BOS, break of structure. And for a change of character, when price is breaking structures, breaking highs, and then suddenly it takes out a low and start breaking structures to the downside. That's what they call change of character. Change of character is market changing trends. That's change of character. So that's just simply what market structure means. Premium and discount is just simply the market retracement, and the retracement market is retracing to allow the institution to buy at a cheaper price. When the market is about to sell, they take it to premium before selling it, and when the market is about to buy, they take it to discount before buying it. It's just like regular buying and selling of goods. You want to buy a cheap price and sell it at the higher price, and buy at a cheap price and sell it for a higher price. It's just simply like that. So this is how premium and discount work. When price is moving in a direction, it retraces back. Then you are going to take your Fibonacci, take it from this high to this low. The midpoint of it is called equilibrium, and when you want to be buying when it's at discount, which is when it's at discount, and you want to be selling when it's at premium. That's just simply what premium and discount means. The last one on the list is top-down analysis. Top-down analysis is simply doing what I just taught you on different time frame. And how I love to do it is, I do my top-down analysis from the weekly, then to the daily, to the 4 hours, then to the 1 hour or 2 hours, then 30 minutes. I don't go lower than 30 minutes. And that's how I do it. You do exactly, you map out your market structure and map out your premium and discount, which is still equilibrium. You map it out on each of these time frame, and that's just how I get my bias. This is a bias on gold I sent to my community last week. And this is the daily time frame. So in the daily time frame, it was breaking structure. It took out this low, and you can see I was expecting price to retrace into equilibrium, but it didn't from the daily time frame. But from the 4 hour time frame, price broke a structure here. Then I draw out my premium and discount. I was waiting for price to get into discount so that I could sell. And let me show you exactly what price did. As you can see, this is what price did. Price came to the zone which I marked. This was the break of structure. Price retraced back into equilibrium, which is this time premium. It came back to premium, and when it came to the premium, you can see it's retracing down. And I know it's not over yet, but you can see it's retracing down. So that's how I get my bias. As it's retracing down, you can capitalize on this move. So let me show you guys a live chart example of what I'm saying. This is a break of structure. Let's see. The price, after shooting up, the price later get into discount before buying. If you look closely, you see price tap discount before buying. Price tap discount before buying. So let's take another look at some more examples. You can see there's a break. Price broke the structure, BOS. Price broke the structure. Did price later tap equilibrium before moving in the direction it wants to move? Yes, price tapped equilibrium and it swept out these lows and also swept out this low and also filled this fair value gap. So you see, you can use that as a bias. When price is moving up to this your target, you can use that as a bias idea. Another bias idea is you anticipate price moving to equilibrium. Instead of you only participating in this move, you can anticipate price going to equilibrium. Let's take a good look at gold. Let's scale down to the 4 hours. Okay, let me just show you what I mean by a top-down analysis. If you look closely, you will see we are in an equilibrium. So what do you expect when you are in an equilibrium? You expect price to reverse. So that's exactly what we are going to anticipate. Now let's scale down to the lower time frame. So immediately when you know that we are in an equilibrium, you anticipate a reversal. So you started seeing price showing a signs of reversal. You don't participate immediately. You wait for a clear market to clearly show its hands. So as you can see, price came to equilibrium before selling. It also took out these lows, these highs. Still broke the structure here, but did it take out this high? Did it? Yes, it tapped equilibrium. It swept out these lows. So it broke structure again, BOS. Did it tap into equilibrium? Yes, it did tap into equilibrium. So as you can see, it tapped into equilibrium. What did it do? It took out these lows, took out this high. What else did it do? It filled this fair value gap. So you see how it is. So it's very easy like that. So let's take one last example. As you can see, there's still a break of structure here. So once we see a break of structure, what do we anticipate? We anticipate price moving into equilibrium before selling. So now even here, you can also use here for your buyers. Since you know that after price has break the structure, price is most likely going to reverse. So you can use this as your bias. From here, you can take your buyers from here, and anticipate gold getting into premium. That's your buyers. You anticipate gold getting into premium, then immediately once it reaches the premium, you swap buyers and anticipate gold reversing. And that's just how easy it is. And as you can see, gold came, it took out these highs and it reversed. This is how I look for my buyers. It's as easy as that. If this video has added value to you, do well to like and follow my channel for more.